Welcome back. As we just saw, tech stocks are rallying. Part of the reason why is that President Donald Trump plans to invest $500 billion US over the next 4 years on artificial intelligence initiatives, including data centers. Joining us now from Winnipeg to talk about this and other market-related topics, Grant White, Portfolio Manager and Investment Advisor at IA Private Wealth. Grant, thanks a lot for joining us. The tech stocks are hot again. There is a catalyst, the announcement from the White House on a artificial intelligence collaboration involving some big names in the sector. What is your thought? What is your thoughts on this? Does this add momentum to the artificial intelligence story from an investor's point of view?
Yeah, absolutely. I mean, I think that the interesting side of this is that, just when we didn't think these companies could go that much further, perhaps, on short notice, then something like this comes out, and of course this is throwing gasoline on the entire story, because this is opening up the gates a little bit more for anything related to AI, and it's clear that the policy direction is they want to win this race. They want to be the leaders in the world in AI, and that was always the case. But President Trump has essentially taken off the guardrails here and opened up the floodgates, if you will, and they're literally trying to pour money at this. So I would say this is very optimistic. I think it's again a risk on for AI, and I'm excited about what this means for a number of these companies. And you mentioned Oracle previously as one of those companies, but there's a number of companies that I think that this plays out very well for in the coming years.
So when your clients come to you and ask you, Grant, how much exposure to artificial intelligence should I have in my portfolio, what kind of answers do you provide?
Well, everybody wants more of it than they probably should have in their portfolio right now. Of course, I think that is the big risk, Paul, though, and I think you bring up a good point. Is there are a lot of investors that are chasing returns, and that's natural after we see a company like NVIDIA, who's absolutely reached orbit over the last number of years, obviously, with their returns. So there is a lot of risk in that, I think. And then what investors need to be a little bit careful about is pricing still really matters. And in fact, I think pricing matters way more this year than it has in the past number of years. I think investors, I've said a couple of times that lazy investors might be punished this year, or are going to be punished this year. And I think that is still going to be the case despite this recent announcement. So what I do think investors need to be very careful of and not getting too overweight in is on companies that are overpriced. I would say NVIDIA is a fantastic company. I think today it's just reached again the largest company by market cap in the world. It's a fantastic business. But even a fantastic business at a bad price can be a bad investment. And so if I'm an investor today, which I am, and what I'm recommending to our investors is pricing still matters. So we're looking for other opportunities in the AI space that might not be as well known as NVIDIA.
Okay, you just talk to us a bit more about Oracle. It's in the news today. You like this one, and I think you hold it on behalf of clients, correct?
Yeah, that's correct. Oracle is a fantastic business. And I would say it's kind of the in-between of what I was just talking about, because everybody knows that Oracle is a pretty good company. Larry Ellison is one of the smartest people in business. And that's evidenced by who follows him around, whether it's Elon Musk or Steve Jobs back in the day. But I think where Oracle is very well positioned here is it's a bit of a more diverse company than a lot of these other ones. The other side of it, and I love the recent investment that they're making into Stargate, because this does place them very well with this momentum trend that's going on in AI. And I think that should bode well for them. But I think what I like about Oracle is a little bit more diverse than the average company in AI. And at the same time, pricing is still a little bit better because they haven't gone through that. I mean, they're climbing a lot today. But they haven't gone through that same parabolic growth that a company like NVIDIA has over the last couple of years. They've grown, don't get me wrong, but pricing is a little bit better. And so I think if you've missed the NVIDIA train, maybe you should look at a company like Oracle. And I think that is a pretty good investment over the next few years. If
you've missed the NVIDIA train, should you be looking at Micron Technology, which is a chip maker and well off its 52-week highs? This is another stock you like.
Yeah, this is one where I think that it's been overlooked because there was a couple of reasons for that. I mean, we look back a couple quarters, there was a lot of inventory of their memory chips. And this is what they do, right? They provide these memory chips, which go very well with products that NVIDIA produces, for example. But there was a higher inventory of them with a lot of the companies that they were selling for. So they weren't selling as much, but that's been worked through. And so I think that what we're going to see over the next little while is an uptick in their sales. They're so well positioned, though, too, because everything that's going on in AI is going to require inputs from companies like Micron Technology as well. It's not a whole lot different than what the reason people are buying NVIDIA, frankly. And in fact, Micron and what they produce is partners right alongside with NVIDIA. And so I think that we're going to see some very nice sales there. Why, again, I like this. Again, price matters. And this is one where, again, if you've missed NVIDIA, I would be looking at a company like Micron who hasn't seen that same price appreciation. And from a price earnings perspective, they're much more favorable right now in a portfolio. So this is one I'd be looking at if you've missed that train.
Okay, Procter and Gamble, to switch sectors completely, consumer staple stock. What are your thoughts on Procter and Gamble?
Yeah, so Procter & Gamble is an interesting one. I mean, we have it as a hold right now. This is obviously the completely opposite end of the spectrum, as you point out. We have it as a hold right now. We think that the company will continue to chug along. From a growth perspective, it's not nearly as interesting, obviously, as some of these other companies we've been talking about. But I do think it's a good staple in the portfolio. We're not actively pursuing more future, like new investment into the company. Where we do hold it, or where investors holding it that are watching, I would suggest, it's a good holding position. I'm not worried about it, but I do think we'd have to move along a little bit further to see something a little bit more interesting out of it. There are some legal challenges that they're facing. It's not something I'm overly concerned about, but it's just something that is lagging over the stock. And so, we'll see how that all plays out. But overall, the company is still well positioned. It's still going to be, we like to say, keep your money boring. Well, Procter & Gamble is going to be a boring stock for you probably, and that's a good thing if you hold it in your core holdings.
Grant, thank you as always for your time. Grant White is a portfolio manager and investment advisor at IA Private Wealth.